Alright, today our discussion is about employee benefits. IAS 19 would be discussed in this video. The employee benefits, an entity provide benefits to employee for rendering services. The employee will work for the entity for the company, and return the employee will demand some benefits, prerequisites from employer or a company or entity who is given him or her employment job. Okay, so let's start. IAS 19 prescribes the accounting for all types of employees benefits except share-based payments. Why? Because share-based payments is already explained in IFRS 2, to which IFRS 2 applies. So that's why it is for all types of employee benefits prerequisites except IFRS 2. Every employee benefits are all forms of considerations. Consideration means amounts given by an entity, given by a company in exchange for services rendered by employees, or for the termination of employment. IAS 19 requires an entity to recognize. Two things is discussed over here. First, when you give you have to give considerations, amounts to employees, an exchange of services rendered by employees to employer. Number first. Number second. Number second is that when you want to terminate your employee without his will, and he has signed agreement with you for 3 years. For example, a bank cashier has signed agreement with a bank, MCB bank, that I would work here for 3 years. If I left here before 3 years, so you have to cut lump sum amount of my salary. I will pay fine. But if you terminate me, then you will pay me the cost, which is estimated for 3 years. So this is called the employment benefits, termination benefits, when an employee is gonna fire. Okay, a liability when an employee has provided services in exchange for employee benefits to be paid in the future. It is the liability of the entity. When it is paid to employees, then this liability turns into expenses. Okay, an expense when the entity consumes the economic benefit arising from the service provided by an employee in exchange for employee benefits, as I explained in the above paragraph. So this is simple. Okay, now we are going towards short-term employee benefits to be settled within 12 months other than termination benefits. Short-term employee benefits. What are these? So let's see. These are recognized, these are interpreted, recognized when the employee has rendered the service and are measured at the undiscounted amount of benefits expected to be paid in exchange for that service. Okay, post-employment benefits other than termination benefits, and short-term employees benefits that are payable after the completion of employment. Okay, what's new here? Let's see. Plans providing these benefits are classified as either defined contribution plans or defined benefits plans, depending on the economic substance of the plan is derived from the principal terms and conditions. A defined contribution plan is a post-employment benefit plan under which an entity pays fixed contribution into a separate entity, a fund, and will have no legal or constructive obligation to pay further contribution if the fund does not hold sufficient assets to pay all employee benefits relating to employee service in the current and prior periods. Under IAS 19, when an employee has rendered services to an entity during a period, the entity recognizes the contribution payable to defined contribution plans and exchange for that services as a liability, accrued expense, and as an expense unless another standard requires or permits the inclusion of the contribution and the cost of the assets. A defined benefit plan is any post-employment benefit plan other than a defined contribution plan. Under IAS 19, an entity uses an actuarial technique, the projected unit credit method, to estimate the ultimate cost to the entity of the benefits that employees have earned in return for their services in the current and prior periods. Discounts that benefit in order to determine the present value of the defined benefit obligation and the current service cost deducts the fair value of an entity plan's assets from the present value or of the defined benefit obligation, determines the amount of the deficit or surplus, determines the amount to be recognized in profit and loss and other comprehensive income in the current periods. Those measurements are updated each period. So, what is mean by uh, in the above paragraph? I read. The meaning is simple. You have to provide provident funds, pension funds, and a lot of other types of funds to your employee. You have to provide them allowances, reimbursement. So this is the cost for your company. This is the first liability for you. When you pay toward your employees, and employer pay toward employees, then this becomes expense. All right, some other long-term benefits. These are all employees benefits other the short-term employees benefits, post-employment benefits and termination benefits measurement and similar to defined benefits plans. Employee termination benefits. Termination benefits are employees benefits provided in exchange for termination of employees employment. An entity recognize a liability and expense for termination benefits in the earlier of the following dates: when an entity can no longer withdraw the offer of those benefits, and when an entity recognizes cost for the restructuring that within the scope of IAS 37 and invoice and payments termination benefits. Thank you. This is all about the employee benefits. It's easy standard, but you have to understand for your further information about the employment and employer and the company hire and fire. What benefits you have to provide to your employees at the time of termination. Thank you.